Yeah, good morning, everyone. Yesterday, we saw a very good bounce back in US market ahead of inflation data today, which will be coming over there. That we feel is mainly driven by some sort covering, the, which is mainly driven by some good results which has come over there. And also ahead of the event, people are reducing their positions. And apart from that, if we see futures of US market are more of a flattish or marginally down, and even Asian markets are more of a flattish. Uh, on the other hand, commodities are showing some positive trend, though crude oil is more of a flattish. But if we see aluminum is up by around 2% and hitting many year high. And copper has also supporting aluminum is up by around 3%. Iron ore is up by around 0.7% and steel is flat. Apart from that, we have a monetary policy meeting today. The expectation is that there will be some increase in the reverse repo rate. If we see reverse repo and repo rate, there is a gap of around 65 basis points, which has been created to support the economy during the pandemic period. And that is now expected to come back to normalize. Generally, the gap between pre-COVID, it was at around 0.25%, and now it is at around 0.65%. So the maximum increase can be around 40 basis points. So market expectation is of around anywhere between 0.2 to 0.25%. This is if this comes, then that is okay. That will be more of a normalization of the policy. But the key thing will be how the uh, governor is guiding for the futures and what is his indications on rate increase, which they may be willing to take over a period of time. And I think market will react to that. We are seeing that the bond yield post budget has moved up sharply, and it went up as high as near to around 7%, and right now at around 7.8 6.86, or between 6.86 and 6.90. So it's still on a higher end side. So whether any government take RBI take any measures to cool off this high interest rate environment. Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, we already see the bounce back at downside, and we expect the further momentum towards. But in upside, we expect some resistance in market. 17,000. 570 and 17,600 next important resistance for market. At this moment, strong support place around 17,400, 17,370 at downside. If Nifty break this range, then we again see some pressure. But in upside, 17,600 is the next important resistance. So we can see the in upside momentum towards 17,600. Then we can see the profit booking in upper level also. So Nifty trading in a major resistance zone. So we expect profit booking and upside. Bank Nifty also trading near support zone. First importance resistance for Bank Nifty is 38,850 in upside, and second 39,000 in an upside. So we expect Bank Nifty we break out this level, then we expect further momentum. Otherwise, remain a same range, and downside important support place around 38 400, 38 500 at downside. Break that level, then we again see the some pressure in Bank Nifty also. Nifty Finance also trading near the resistance zone, that is come around 17,600 and 614 upside, and support place around 17,500. In stock specific, in banking, HDFC Banks looks at current level good. ICICI also looks positive at current level. And Loris Lab also looks positive at current level. We expect further momentum towards 550, 550, 516 upside. Support place around 518 and 514 at downside. That's it for technical. Derivative I can carry.
Yeah, thank you, Vikas. Good morning, everyone. This is Amit Puttani. So, as per yesterday's derivative data, we have seen major put writer positions are getting added up at the nearest strikes. Almost, if we consider the 3 month wide positions for coming 3 months, we are seeing that 17,000 to 17,200 is holding a strong base currently in the market. And on the higher end, 17,500 is acting as an important resistance zone. Once Nifty manages to go above 17,500 level, then we might witness 17,750, 17,800 levels in coming trading session. While Nifty was having a strong resistance at 17,350, 400 level, yesterday we have seen Nifty managed to give close about that level sustainably. So currently the view seems to be positive in the market to hold a long position with the support of 17,200 level. While we are seeing the PCRY is also coming from the oversold zone into buying momentum, so PCRY is likely to go around 1.12 to 1.15 level. Today we are seeing that the banking policy is also there, so we might need to watch currently in the market. In the second half, we might witness again the volatility might be witnessed in the market, but scenario currently looks positive. So hold a long positions. As in yesterday's trading session, we also witnessed that the buying was witnessed from all the major sectors. So currently we are seeing that in coming trading session, banking, auto, and textile sector seems to be positive, while Bank Nifty is likely to outperform in coming trading session. The selective stock from the banking counter looks positive from the banking front, while from another sector we are seeing that JSW Steel and UPL, these two counters have witnessed a good OI positions getting added up. So keep watch on this.
DCB Bank results were below expectations. Slippages remained high at 6.6%, among the highest we have seen in banks. Thus, gross NPAs remained flat. This was an outcome of more than 2 times increase in gold loan NPAs due to lower collections and repayments. However, slippages in other segments were down by around 10 odd percent quarter on quarter. We remain positive from long-term perspective. Thank you.
Yeah, good morning. ENL has posted its result and the company has posted above expectation numbers both on the revenue and the margin front. 3i Infotech result has continued to remain weak with revenue declining by 6.4% Q on Q. Even EBITDA margins has taken a hit and came in at negative 5.4% versus QOQ of negative 10.9%. Thank you.
Yesterday, Noviska, that is Nirma Cement, has come up with the numbers, and as they are the larger player in Eastern region, and Eastern region, most of the player had seen a lot of pressure on their margin because of the lower prices, has reported poor number, and similar is the case with even Noviska also. The company has reported decline of almost 31% Q on Q in EBITDA. So numbers were below expectations. Apart from that, yesterday, Jindal Steel and Power has given positive outlook for the coming period. They had indicated that the EBITDA per ton for the next quarter will be around 20,000. Last quarter, in the third quarter, they had reported EBITDA per ton of 17,400. If you see Tata Steel, they had indicated for the standalone operation, that is India operation, the EBITDA per ton will decline by 3,500. So this seems some surprising indications from Jindal Steel and Power that their EBITDA per ton will be increasing by around 2,500, whereas Tata Steel is indicating around decline of 3,500. The key reason what management has indicated that the coal cost will not be having larger impact on their EBITDA per ton, and a lot of increase in coal cost has already been accounted in this current result. And apart from that, increasing volume which is likely to increase in the fourth quarter from the low level of Q3, which came at around 1.8 million ton to next quarter it will be over 2 million ton. So that will support the overall cost, whereas and as such they are thinking of increasing the EBITDA per ton. They had indicated that currently the demand is very good both from Indian market and even from the export market. The added advantage which Jindal Steel and Power has is that they got captive coking coal, which is the key reason for pressure on the cost for most of the steel company. They got captive coal to the extent of 50% of their requirement from the mines in Mozambique, South Africa, and Australia. So, in all, outlook for near term looks comparatively positive for Jindal Steel and Power. Then Sham Metallic came up with the numbers. The numbers were okay set of number. If you see, compare it with the similar player, the result is considered to be better because most of the player had seen decline in EBITDA quarter on quarter, but this company has reported more of a flattish EBITDA quarter on quarter. Then Sanghi Industry came up with the number. The numbers were declining both quarter on quarter. Declined year on year, but quarter on quarter had seen some positiveness. So overall, looks a bit declining because Sanghi Industry had a negative, larger decline in the previous quarter. And from there, it is showing more of a marginal increase because of higher volume that company has sold and which has compensated for the decline in prices. So at such quarter on quarter, EBITDA remained flattish. Then GMR Infra has reported number. This number is since the demerge is complete and most of the power and road assets are now being transferred and will be getting listed separately. This result is purely of airport, and this has shown very good numbers, good improvement both year on year and quarter on quarter, because previous quarters were seeing impact of lockdown, and we had seen a lot of improvement in the third quarter and was functioning to a larger extent stable level. We may see further improvement coming in coming quarters because of the higher utilization of the airport, and as such is likely to show better result going forward also. Then Steel Authority has come up with the number, and the numbers were had declined substantially. If you see, EBITDA per ton has declined by from EBITDA per ton has EBITDA margin has declined by almost to 400 basis point from 17.6% to 13.5%. Which is considered to be the larger than other player also. So the overall decline is comparatively higher for Steel Authority of India Limited. So as such, results is below expectation. Similar is the case with ACC also. Here also company has reported declining number. EBITDA per ton has come at around 740 rupees versus expectation of 970 rupees and quarter on quarter of around 1060 rupees. So almost 300 rupees decline in EBITDA per ton, which is comparatively higher than the other larger players. Then Solara Active Pharma has come up with the numbers. The numbers apparently looks very bad. But there are specific reasons for that. There are two reasons why the numbers are so bad. First is they had changed the way they want to sell their product. So earlier they were selling it through distribution network, and now they are selling it directly. So that has impacted the sales substantially in this quarter. And apart from that, they had felt a lot of pain on account of lower prices for ibuprofen and which has and lower demand for ibuprofen, which is the one of the largest product which they manufacture. And apart from that, other API also had seen pressure. So overall, the result looks very bad. Then Berger Paint has reported numbers, and the numbers were declining. And if we compare it with Asian Paint and even the other player, the numbers looks a bit comparatively lower as compared to Asian Paints. Then Petronet LNG reported results above expectations. Surprisingly, other gas company, most of them has reported negative numbers. But here the company has reported EBITDA of around 1700 crores versus expectation of just 1160 crores, and quarter on quarter also 1300 crores. So substantial improvement, and Petronet LNG need to be seen in today's trade. Then FSN e-commerce, that is Nykaa, which is got recently listed, has reported the numbers, and the numbers are comparatively okay set of numbers, or in line with expectations. Gross margins has remained more of a stable or marginal improvement, though EBITDA margins looks lower year on year, but that is mainly because of some last year was having some concessional expenses. But overall looks in line expect numbers for Nykaa. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.